see my screen. Welcome everybody to today's webinar. Today is going to be an exciting topic. Everybody has been talking about it. Not much has been published about the future of this topic. I know why you're here. The reason why we're here is to talk about the Swiss franc. So we're going to give it a couple of minutes for introductions, so we allow other members to attend by the time that we get into our topic for today. So here, let's take a quick look at our attendees for today. Okay, so we're growing in the attendees. We'll give it a couple of more minutes. So today's agenda, obviously we're going to talk about Swiss franc. We're going to start from the history. We're going to talk about the political relationships between Switzerland and everybody else in the Eurozone. And we're going to cover the recent shock, the reasons why it happened, and what the future will hold for Swiss franc traders or anybody who is looking to trade any other instruments in the Eurozone that is directly correlated with the Swiss franc. We're still seeing some people joining us, so I'm going to give it a little bit more time before we start. Okay. So before we start, please grab a pen and a paper to take notes, or if you know how to use your snipping tool on your PC or a screenshot tool on your Mac, you can get that prepared as well so that you can take the most out of this presentation today. I always believe in notes, so you don't want to waste your time or anybody else. And also, if you're listening to the webinar while you're browsing your internet or doing something else, that's fine too, but make sure to occasionally come back, and if you have any questions, do ask it in the chat box, the little chat box you can see on the left-hand side of your webinar tool. We definitely want this webinar to be an interactive one, so don't hesitate to just interrupt me and ask questions. We might not be able to answer all questions today during the webinar, but even if we don't get into your questions right now, we definitely make sure to get back to you later on. But as much as I can, I will try to answer your questions during the webinar. This is a live webinar, so let's make it interactive. All right, we have Zach, Vic, Rahil, Nadal. The list goes on. Let's see. Martin's Fran, Derek, Anthonius, Maria. All right, this is great. So let's get started with the introduction. I assume you already are familiar with Orbex. I want to do a brief introduction to Orbex's trader library. They have a variety of information, education, and trading tips, analysis on a daily basis. That includes the video education program that is presented by myself, and analysis and daily tips from various vendors to Orbex, which will help you to trade responsibly and make the best decisions with your trades. As for myself, for those of you who are new to the webinar and wondering why you should be listening to this webinar, my name is Kiana. I'm the founder of InvestDiva.com and the author of a book published by McGraw-Hill. It's called Invest Diva's Guide to Making Money in Forex. I was not originally a Forex trader. I was trained an electrical engineer in Japan. Originally, I'm from Iran, actually, but I went to Japan. I thought I wanted to become an engineer. I studied it for 6 years, and while I was in college, I was introduced to Forex. I started making money, and I became passionate about it. Therefore, I dropped what I was trained for. I came to New York to pursue Forex trading in the land that loves to trade, and that is why now I focus on Forex trading solely. I do education, we do analysis, and together we have built a great Forex trading community. So I am very involved in the Forex industry. That's why if you have any questions about anything that you can think of in the Forex market, do ask during the webinar. And we're going heads down to today's topic, facts and terms. For those of you who are not familiar with the Forex terms, we're only talking about Swiss franc today. So Swiss franc, it is the symbol. When you hear about it on TV, it's usually referred to as franc. The symbol for it is FR or SFR or FS. But in the Forex world, the 3-letter symbol for Swiss franc is CHF. And that is only because Switzerland is spelled differently in the Swiss language. I don't even remember what it was, but it does start with a CH. That's why it is CH franc or SHF. It has been around for a while, and it is issued by the Swiss National Bank. From now on, in this webinar, we're going to refer to Swiss National Bank as SNB or SMB. So we're going to talk about SMB a lot today. One important thing that I have to cover before we go into the technicals and fundamentals of Swiss franc is the Swiss franc's value versus other currencies. We have covered this in our Forex for beginners before, but I thought it's crucial for today's webinar as well. How you represent a value of a currency, as you know, currencies come in pairs, and you can say, for example, dollar versus Swiss franc, for example, let's say is 0.91. That means $1 is 0.91 Swiss franc. That is in the Forex world. That is how you present the value of Swiss franc in the Forex world. It is based on the dollar's value. But, for example, if you're listening to Swiss National TV, they would present it in a different form. They would say 1 Swiss franc is $1.10. It's reversed, right? So you have to pay attention to this because we're going to cover this a lot today. So when we say dollar Swissy, as you see the symbol over here, let me highlight it. So this is how we call the value of actually US dollar versus the Swiss franc is 0.91. That means 1 Swiss franc is 1.10. It's a simple calculation, right? You simply divide 1 by the rate of dollar Swissy, which is 0.91, and that gives you 1.10. So in the Forex world, this is how we do it. But in the other news world, this is what you're most likely to hear. It's both the same. For in the Forex world, we don't change the we don't change how we present the currency pairs. They always come. The Swiss franc normally always comes in the second base in a currency pair, whether it's the euro, whether it's the dollar. So another example here that we have is the euro versus the Swiss franc. At the same time, that dollar Swissy is 0.91. Euro Swissy is 1.20. That means 1 euro is 1.20 Swiss franc. You have to pay 1.20 Swiss francs to buy 1 euro, which means 1 Swiss franc is 0.83 euros. That is, again, the simple calculation of dividing 1 by 120. You get 0.83. This is the Forex version. This is the international news version. Both are correct. You need to know both of them and not get confused by them. Okay, so my mouse is not working right now. All right, so let's start with the history of the Swiss franc of the Swiss Confederation from 1850 to present. So, you know how they say when they want to be politically funny, they say somebody's trying to be Switzerland. That means they're trying to be neutral, and they're trying to be, how we call in the economic vocabulary, a safe haven. So the Swiss franc has historically been considered a safe haven currency with virtually zero inflation and a legal requirement that a minimum of 40% of the currency be backed by gold reserves. So, however, this link to gold, which dates to back in 1920s, was terminated in May 2000, I believe. And by March 2005, following a gold selling program, the SMB held 1,290 tons of gold in reserve, which equated to 20% of its assets. So it's a gold-backed currency. That is why it's so powerful. Now, we're going to cover this later again, but the new referendum on November 2014 on the Swiss Gold Initiative, which proposed a restoration of 20% gold backing for the Swiss franc, was voted down. But in the past 3 years, let's say 4 years, from 2011 to 2014 is when we've seen the biggest movements and some of the most historic actions towards the Swiss franc. So we're going to cover it, as you can see in the chart over here. I've marked the most important dates in the rates of Swiss franc versus the US dollar, shown in the dollar Swissy format, the Forex format. So what happened is, let me highlight it over here. On March 2011, the franc, okay, so it's right over here, right? So you can see before March 2011, dollar Swissy was always above 0.91 over here. So this spot is March 2011, and the franc climbed past the 0.91 per US dollar, which is the US dollar, the 1.10 mark for franc. You remember we covered it before. So in June 2011, franc got even stronger. As you can see, so this is a dollar Swissy chart. You have to keep that in mind, that the dollar Swissy chart, when it goes down, that means the Swiss franc is actually getting stronger, and that is why the dollar Swissy chart is moving down. So when we say that the Swiss franc, the dollar Swissy is marked at 0.83 in June 2011, that means that franc was 1.20 US dollars at this point. So it was getting very, very strong. And the reason why was because investors were seeking safety among all the continuation of the Greek sovereign debt crisis and the continuation of the same crisis in Europe and the debt crisis in the US. And so these all propelled Swiss franc past even furthermore to 1.30 US dollar. That is when dollar Swissy got down to this point. This is the bottom in the past thousands days. So it's in the past, so since 1995, this was the lowest point for dollar Swissy, 0.769, right? So everybody was panicking, and the Swiss, they always want everything to be calm, and that is why as of August 2011, as you can see here, when it passed 0.769, the Swiss National Bank, they decided to boost the franc's liquidity in an attempt to counter its massive overvaluation. Right? So this is exactly when this happened. They decided to, okay, we can't have Swiss franc to be this strong while the whole Eurozone economy is in such crisis. Okay, let's go to the next slide if I can get this mouse working. So, July 2011, The Economist, you're all familiar with it, they, oops, sorry for the technical difficulties over here. So The Economist argued that its Big Mac index in July 2011 indicated an overvaluation of 98% over the dollar and cited Swiss companies releasing profit warnings and threatening to move operations out of the country because of the strength of the franc. So demand for franc and franc-dominated assets were so strong that short-term Swiss interest rates became actually negative. So that was a big deal. I'm sorry, I'm having difficulties with my mouse over here. This is a new computer that I'm not very familiar with. So on September 2011, going back to the technical chart, this time we're looking at the Euro-Swissy monthly chart. On September 6th, 2011, when the exchange rate was 1.095 Swiss franc. So in other words, it was right here, as you can see, it was 1.006 euros. So the Euro-Swissy rate was the lowest of the lowest. This appeared to be heading for parity with the euro. So the SNB, the Swiss National Bank, set a minimum exchange rate of 120 francs to the euro, and that is exactly what you have been hearing. That is what's called the capping of franc's appreciation. So they said the value of the franc is a threat to the economy, and that was prepared to buy foreign currencies in unlimited quantities. So in response to the announcement, the franc fell, obviously, against the euro to 1.22 from 1.12 francs and lost 9% against the US dollar within 15 minutes. So whoever says and thinks that Swiss people are don't make volatility in the market, so this has happened before actually. So within 15 minutes, this happened to the markets, and against the intervention shocked the currency traders because everybody thought that the Swiss franc is a safe haven, right? But after that, we're going to go back to here. The franc fell 8.8% against the euro, 9.5% against the dollar, and at last 8.2% against all 16 of the most active currencies on the day that they announced it. But after that, they maintained it, and it was, as you can see over here, almost ranging around, for the Euro-Swissy, around the 120 level. And everybody was just happy with the Swiss franc range trading. Nobody was thinking that anything out of the ordinary is going to happen because the Swiss had their word on it, right? That they're capping the value of Swiss franc versus the euro, and it's not going to go below 120. So I'm going to actually give you a personal example of what happened to me. So yeah, this is it. The Swiss franc was supposed to be safe haven. So I obviously was one of the victims of this, and I thought that the Euro-Swissy is not going to go below 120 like ever unless the Swiss government announces something in advance. So what I had done was that I actually set an automatic open trade at the 120 level, and the bet was that once the Euro-Swissy pair hits the 120 level, it did briefly once on April 5th, 2012. It was very brief, as you can see, highlighted over here, but you can see that it went back up. So our psychology in Forex trading normally is that what goes down goes back up, and the markets trade in circles, and the fundamentals seemed to be so powerful at this time that I thought, and a lot of other people also thought, that the market for Swissy touches the 120 level is going to bounce back up and go back to 125 level, the resistance level over here. So that is why I had an open trade at 120 and a bullish Euro Swissy trade for on 120. And I completely forgot about it. I put that trade in about a year ago. And although I was bearish the euro versus other currencies in my other charts and my other portfolios, this one had remained open. The only smart thing that I did over here was that I had my limits. I had a stop loss set up over, I assume it was 118 or something. And so that is why I didn't get that much of a shock of what we're going to cover that happened before. So let's actually over here get a see if any of you were trading the Swiss franc before the shock happened. So type in a Y if you were trading where you were long or short the Swiss franc before January 15th. Nobody was long. All right, that was probably a smart move. Do we have any short positions on Swiss franc? Okay, we have Ziad who had a short position. That was, did you have a short position on Euro Swissy or you had a short position on Swiss franc? Euro Swissy. Okay, so that was a good move, right? Okay, so next what happened is this, the jaw-dropping drop on the first dance floor is what we refer to the Forex chart on investiva.com. So I just got this chart straight out of our own article on, over on investiva.com. So on January 15th, 2015, the Swiss Central Bank introduced a negative interest rate. I'm sorry. So the negative interest rate was introduced on December 18th, 2014, so a month earlier. And so people could actually see it coming, people who were listening closely to this, right? Because with the euro declining in value over the following weeks, that is when the Swiss National Bank decided to abandon the ceiling on the 15th of January 2015, and the franc rapidly increased in value compared to the euro by 30%. So again, we're now looking at the chart. We're now looking at the dollar Swissy chart. You see that the market went down. That means the value of dollar went down against the Swiss franc. That basically means that the Swiss franc got extremely, extremely strong within a few minutes after the announcement. And because the move was not announced in advance, that resulted in a turmoil in the stock and the currency markets altogether. And by the end of the closing of the trading day, that day the franc was up 23% against the euro and 21% against the US dollar. And the full daily ranges franc was equal to approximately $31,000 per single futures contract. So if you were positive, that was good. If you were long the Swiss franc, that was a $31,000 per single future contract. If you were short of it, if you were shorting that Swiss future contract, you were basically completely screwed. And that is why everybody was talking about it. So as you can see in the chart over here, the market moved in that few minutes collectively more than it had moved in the past 1,000+ days. You see? So it completely wiped out all the improvements that it had made up until 2015 from back in 2011, just in a few minutes it dropped. So this is one of the most interesting historical charts ever, and I'm going to save it. So the question that everybody is asking is that why did the S&P and the peg, why did they suddenly drop the cap and created all this chaos in all the markets globally? So there are several reasons. We're going to mention only three. Some analysts have other reasons behind it, but the three major ones that I believe could have initiated this. The first one is that many Swiss were angry that the S&P had built up such a large foreign exchange reserve. So printing all those francs, they say it will eventually lead to a hyperinflation. But most analysts say that these fears were probably unfounded because Swiss inflation is actually too low and not too high. But it was a hot political issue, and so the S&P had to respond to it. So in November, there was a referendum, as I said before, which, if it had passed, would have made it difficult for the S&P to increase its reserves. So the second reason, the S&P risks irritating its critics even more thanks to something that was expected the following week, and we're still expecting that it might come. Many expecting the European Central Bank will introduce a quantitative easing. So the Swiss franc being hooked up to the euro because of the peg, that was a critical condition. And a quantitative easing in the euro entails the creation of money to buy government debt of the Eurozone countries. That will push down the value of the euro even more than it was already down. It was already in historical lows, but a quantitative easing will push it even lower. So this might have required the S&P to print lots more francs to maintain the cap at 120, the euro dollar 120 cap. So this could also be one of the reasons behind it. There also could be a third reason behind this decision. During 2014, the euro depreciated against other major currencies. As a result, again, as we said, the franc, because it was pegged to the euro, depreciated too. In 2014, it lost about 12% of its value against the dollar and 10% against the rupee, although it appreciated against both currencies following the S&P decision, right? So now this scenario is that a cheaper franc boosts exports to America and India, which together make up about 20% of Swiss exports. So the S&P argues that if the Swiss franc is not so overvalued, then it has no reason to continue trying to weaken it. So these are the possible reasons of what happened, but more importantly is what happened after this decision. Says that the key interest rate was also lowered from minus 0.25% to minus 0.75%, meaning investors would be paying an increased fee to keep their funds in Swiss account. This devaluation of the euro against franc, people are now expecting that it will hurt actually Switzerland's export industry. They have a huge export industry, so you probably already know the Swatch Group, for example, saw its shares drop 15% in Swiss francs terms. So that even though the price was approximately unchanged on that day in euro terms, UBS, the Swiss bank, downgraded its forecast for Swiss growth in 2015 for 1.8% to 0.5%. So after all, it probably wasn't that smart of a decision. Other troubles that happened on the announcement, it was obviously the currency market. We're not going to cover them all, but you probably already saw it on the news. The Alpari UK went bankrupt. Then Alpari Japan came in to buy them out, and so a lot is going on right now. They're borrowing money from KPMG, and a lot is going on on their scenario, FXCM, one of the largest brokers, they lost approximately $225 million. And people were anticipating it was going to go bankrupt, but they got lucky because they were able to borrow $300 million to deal with the losses, but that also made them into, put them in so much trouble because they couldn't basically borrow all that money for free, so they had to come up with new strategies for their brokerage and their deals. So a lot of Forex brokers are facing losses and difficulties. Orbix, as we hear, was fine. A bunch of other brokers were fine as well, but the market in general was very volatile. Some people made money out of it, some people didn't. So it was very interesting times for the Forex market as a whole. Third aftermath. So this is, again, an anticipation of what's going to happen. After all this, S&P officials still decided to play with investors' heart by hinting that further intervention moves are still possible. According to the financial statement, I'm just going to read it, the S&P indicated that it would continue to monitor exchange rate moves and that it will remain active in the Forex market to influence monetary conditions. Some analysts took this to mean that the Swiss Central Bank would explore unconventional measures in keeping the franc undervalued. Although the SME mentioned that Swiss economy has already benefited from the franc peg, many believe that the central bank might implement smaller scale interventions in order to manage the exchange rate levels. Okay, so we're halfway through the webinar. Let's see if there are any questions over here. Everybody is good. No questions up to here. We're basically going through the history because there were so many questions about it. Okay, so let's go to the second half and the future of Swiss franc. What are the possibilities for Swiss franc? So we can handle this situation. We can go through the future in we can look at it from different aspects. We can look at it from the technical aspect, and we can look at it from fundamental aspects, and we're going to cover them both actually today. And then I definitely want to hear from you if you have any ideas about what the future would hold for the Swiss franc. So over here, we are looking at the Euro-Swissy monthly chart. Monthly chart means each of these candles took 1 month. It shows the range of the market during 1 month. And as you can see, in the month of January 2015, we had one of the longest bearish candles over here. But, I mean, even though we were pretty shocked by the sudden drop on January 15th, again, the technical analysis is holding true. You see this cycle? We had this lows. The Euro-Swissy had touched this low before. It was back in 2011, as we covered before, right? It was September. So the market actually did complete a cycle, although the cycle went down too quickly. The time frame was not what we anticipated, but technically it was something that we could have seen coming, right? That is why, so technical analysis can oftentimes be more useful than fundamentals. If I had not listened to the fundamentals of the Swiss franc cap at 120, I would not have put that automatic bullish trade for euros at 120, right? Because if I had only looked at the fundamentals, I would have known the markets are probably going to complete the cycle and come back down at some point. But obviously, this was something that was shocking. Not everybody was looking for it to happen, and these are very critical times. But another thing that I want you to take a look at is that the Euro Swissy had seen better days too, right? The Euro Swissy back in 2007, 2008, it was all the way up here. So technically speaking, we already covered the historical factors of it and why the reasons why the euro was here and went all the way down. But technically speaking, we could even see the markets to, at some point, don't forget that this is a monthly chart, so this is a very macro view of the pair, the euro versus the Swiss franc. But at some point, we could even see the markets to go back up, right? But looking at more recent or earlier future, say like within the next year or so, right now where we're at, right now the market's plunged all the way to below 1, and we have a pivot point at 1.10 for Euro Swissy. So there are four scenarios that I want you guys to take a look at. I've added the Bollinger Band to this chart. The Bollinger Band indicates that when the market scratches one of the bands, there are 3 bands over here. We have the lower band in red, we have the middle band in blue, and we have the upper band again in red. And the story behind Bollinger Band and its inventor, Mr. Bollinger, who is actually still alive and lives in the west coast of the U.S., is that the markets will eventually find its way back to the middle, to the blue line of this indicator. As you can see, with that sudden drop, the markets is scratching, the Euro Swiss is scratching the lower band of Bollinger. So we could definitely see the markets to come back somewhere in between over here. And this is technically also seen in with other indicators that I'm going to show you in a little bit. But what I want you to keep in mind for now is these 3 levels that are anticipated for the near future. And I'm going to cover these 3 levels and how that will actually affect the Swiss economy, the Swiss growth and inflation, should these levels actually hit the market. So the 3 levels are 0.90, 1, and 1.10. Right now we're somewhere in between. And the break above this pivot level could actually bring back the Euro Swissy back up to the 120 level. Let's now also take a look at the dollar Swissy daily chart. I want to say the reason why is because I wanted to use the Fibonacci just to show you how much higher we can see the dollar Swissy. So the difference between the dollar Swissy and the Euro Swissy is that Euro versus Swiss franc, the Euro is already very weak, and we're having all these crises with Greece and Germany needing to be frugal and all the dovish people all around the world. The euro itself, it's very weak, and that is why the additional strength in Swiss franc makes the pair as a whole go down even more. Do you understand it? So because in this pair, Euro Swissy, Euro is the lead, and we are seeing the Swiss franc's value based on Euro, the lower Euro gets and the stronger Swiss franc gets, we see a down move on the Euro Swissy chart. Same with the dollar Swissy. The weaker the US dollar gets and the stronger the Swiss franc gets, we can see more down moves on the dollar Swissy chart. But the catch over here is that actually the US dollar is getting stronger. We've been having a great economic forecast. We've been having good data out of the U.S. economy. Employment is getting better. And the Fed, well, they're dovish, but still the shape of the U.S. economy is getting better. And that is why you see more up moves in the dollar-Swissy pair than you saw in the euro-Swissy pair, right? So even though the Swiss franc is getting very strong, the dollar is also getting strong, and that is why it is pushing the dollar-Swissy pair back up. Technically speaking, I draw this very interesting Fibonacci retracement vertically all the way down from the top of the candle to the bottom of the candle, because that is our basically our downtrend. We have covered the Fibonacci retracement in the past. What you do when you want to use it is that you choose a higher high and drag it all the way down to a lower low, and then you have the retracements appear. For this specific instance, we have the high and the low both happened in the same day in the same candlestick. That's why we had to go vertically down all the way. So with Fibonacci, what we expect is that when we have a quick or sudden downtrend, the market usually corrects itself, goes back up to one of the retracement levels, and then continues back down on the previous path. So this is going to be tricky because dollar is projected to go higher. Swiss franc is projected to be overvalued. So what we can see is basically a struggle between the US dollar strength and the Swiss franc strength. And this is what we're precisely seeing, for example, on 3 days ago, the markets, the bulls and the bears, could not decide which way to lead the market. But finally, today, the market actually broke above the 38% Fibonacci level at 0.91. So this could have actually opened the doors to the most important, one of the most important Fibonacci retracement levels, which is the 50% Fibonacci level. So we could see the market in the near term to go up to 0.93 or even 0.95 at the 61% Fibonacci level. And then depending on what's going to happen with the FOMC statement end of this week, and if we see more intervention of the Swiss franc, we could see, if we do see an intervention from SMB, we could see the market to go back down to January 15th levels, right? So currently, a near-term projection for dollar Swissy is going up because it already has broken above the 38%, is going up to one of these levels and then going back down, right? So those three levels that I mentioned in the Euro Swissy, now I want to take a few moments to explain about what will happen if the Swiss franc actually continues to be overvalued, and what will happen to the Swiss economy in those scenarios. And the levels that we picked, because it's still unclear on what level the exchange rate will settle in the future, we did the calculations and we have these three different scenarios for GDP growth and inflation that I'm going to cover next, based on these three various exchange rate assumptions for Euro Swissy. So for GDP, which is gross domestic product, I want you to take a look at this chart over here. the first assumption was based on the level of Euro Swiss being capped by the 120 exchange rate. So this has been the initial forecast of GDP that is going to remain at 1.5%. So as GDP concerns, as concerns of GDP growth, you have to first consider the exchange rate impact on the growth directly dependent on the external value of the Swiss franc. The focus here is on external trade and the tourism industry. While exports will suffer from appreciation of Swiss franc, imports will become cheaper and might, because of that, rise, causing further harm to overall growth. So moreover, you have to consider the adverse currency effect on business investments. The lower rate environment, however, is bound to positively support building investments. And so you can see these three over here. So the first line over here is assuming a Euro Swiss rate being settled down at 1.1. So you can go the other way around as well. So if you can see if you see a 1.1 GDP, you can presume that the Euro Swiss rate could settle at 1, or vice versa. At 0.9 rate for Euro Swiss, we can expect a 0.3% GDP for Switzerland. Or vice versa, diversely, if you see the 0.3% GDP announcement out of Swiss franc, you can expect the Euro Swiss to go all the way down to 0.9 again. Another scenario or another aspect for the Swiss franc overvaluation is inflation. How will these three different levels impact the inflation in Switzerland? So the appreciation of Swiss franc causes substantial revisions of the average inflation rate. Imported goods have a weight of about 27% in the consumer price index. And energy prices already exert extreme deflationary pressure on price levels. So because of that, this chart is presuming and is forecasting for the average inflation rate in 2015 to be pushed even more than GDP, to push lower than before, even though the initial forecast, as you can see in the red line over here, was already below consensus estimates, and it probably will remain so. So this whole thing, as opposed to what a lot of people thought, was not that good for overall inflation, because inflation was already low. So if the Swiss franc continues to go down, if the euro versus Swiss franc continues to go down to 0.90 level and settles at that level, that could increasingly harm the inflation for Swiss economy. But if it settles around 1.10, the inflation will probably go down to 0.9%, which is a little bit better than what it would be with a lower Euro Swiss rate. So because of all these, because of all the harms that the Swiss economy could endure because of the Euro Swiss low rate, we could actually see, that is why I said at the beginning of this webinar that we could actually see an intervention from SMB to undervalue the Swiss franc Great. So I think we covered a lot of the fundamentals here. I just want to quickly go back to here and check if we have any questions. We are okay. Everybody's on board. Okay. So last but not least, I want to take a look at the markets today. For those of you who are short-term traders and want to see what's going to happen in the market. So please excuse me as I bring up my trading charts to walk you through the markets and do some technical analysis on the Swiss franc crosses. Okay, so here we go. Here we're looking at Euro Swiss monthly chart. We showed this before. I just wanted to zoom out and go back down to the daily chart to see what the market has up for it. So this is just so extremely volatile that doesn't even fit in my page. So the days before it is just simply dots over here. But we could do, if you're planning to trade Euro Swissy, again, we did the Fibonacci retracement analysis for dollar Swissy, but we could do it for Euro Swissy as well, keeping in mind the euro is not as strong as the dollar at the moment, and therefore you can see that the Euro Swissy hasn't yet reached the 0.382 level, the 38% Fibonacci level, but the market does have a bullish momentum. We had a formation of a bullish engulfing right over here. The candlestick patterns that we talked about before, the reversal or the continuation pattern. So we have over here a bullish engulfing. Let me just, if I can move this, that would be great. So here we have a bullish engulfing, which means that the trend of the market, the Euro Swiss market, is currently for today up, and we could see gains towards 1.05 level right over here. So if you want to go bullish for the next 2 days, that could be one of your scenarios. Let's actually back up this analysis by adding our favorite Ichimoku indicator. So having Ichimoku over here isn't helping us much because the market is still below the Ichimoku cloud. So the overall trend of the Euro Swiss is obviously bearish because it remains below the Ichimoku cloud. But for short term, let's actually see what the sentiment for today has been. It has been very, very bullish. And in the 4-hour chart, we can see the market has been going up, entering the Ichimoku cloud in the 4-hour chart, but at the same time scratching above the Bollinger Band. So if you're trading on a 4-hour chart, so the previous one was for a little bit of a short, longer term trade, a day trader, but for today, right at this moment, we can have this scenario. Let's add our stops and resistance levels. So obviously our key bullish target is right over here at 38% Fibonacci retracement level, and our pivot point is here, the previous resistance level, which is now turned into support, and it also falls at the main intersection over here with the middle band of Bollinger as well as Ichimoku Cloud's Tenkan line. So this level at 1.02 is our pivot point, and our bearish target for Euro Swiss is at 1. So right now with the bullish sentiment, we're targeting 1.05 in the short term, a break below this pivot level, below the middle band of Bollinger would indicate further drops, which for that you could target your bearish, you could set your bearish target at 1.0. Alternatively, if you are going bullish today, you can use this pivot level to set your stop loss in case the market decides to go down, and you can set this as your take profit level. So this was a quick technical analysis for Euro Swiss on the 4-hour chart. Let's do the same for, I am showing my screen, right? Okay, that's good. So let's do the same for the dollar Swiss on the 4-hour chart. We already did it for the 1 hour, for the daily chart. But for those of you who want to, who are heading into the evening over there in the London session, we could also insert Ichimoku, because for these times, Ichimoku is seeming to be more proper for shorter time frames. And I am going to add a Bollinger Band as well, just to make sure, as I've always said, try to have at least 3 market patterns indicators before you make a trading decision. So over here, we are also noticing that the market is approaching the 50% Fibonacci level, is scratching the upper band of the Bollinger Band. So it's very similar to actually Euro Swiss for that matter. The only difference is that over here we're approaching the 50% Fibonacci level, and we know the dollar is doing better. So the chances of dollar Swiss to get to our bullish target is higher than that of Euro Swiss, because even though today we had a very good day in Europe with Mark Carney and all that, talking about Germany and suggesting that Germany needs to become less frugal and change the way they're dealing it, and Mario Draghi is likely to have some points. That is why we had a good day. Also with the Greek elections, we had an overall good week for the euro, but overall things are not that good, looking that good for the Eurozone. That is why a better bet would be for dollar versus Swiss if you insist on trading the Swiss franc versus a major cross, right? So again, our bullish target for dollar Swiss, I'm going to point it over here, would be at 50% Fibonacci level above the Ichimoku cloud, which could actually indicate, if it does reach this target, that could indicate even further up moves, because by the time the market breaks above this level, and it will also break above the Ichimoku cloud, which would indicate even further up moves towards the 61% Fibonacci. So we could have either of these targets for a bullish scenario. Alternatively, if the market goes back down, consolidates around our pivot level at 0.9080, we could then change our outlook to bearish with, let's point it over here, a bearish target appointed at 0.88. So these are your levels for a short-term trade on dollar Swiss as well as Euro Swiss. Thank you so much for joining us today. And if you have any questions, let's go back to our presentation here. If you have suggestions for future webinar titles and topics, please send your requests to info@orbx.com or webinar@orbx.com. As always, trade responsibly and I'll see you during our next webinar.